As the January real estate market hits its stride, we are facing the lowest levels of inventory in Canadian real estate history. So I brought in 5 of the top real estate agents and top real estate YouTubers in Canada to tell you what their predictions are for 2022. The definitive guide on how to manage your credit, product, and elite price in that order. It's never been more important to get your mortgage right. All right, so welcome back. Today I have 5 special guests to discuss the real estate market in 2022, because quite frankly, the way January is starting off, it is going to be a doozy. So I brought in 5 really great realtors, all YouTube celebrities in their own right. If you can call us celebrities, I guess we get recognized on the street every once in a while. But these guys obviously get recognized far more than I do, with their names plastered on bus benches and billboards and all over the real estate markets of their respective cities. So I brought them in and I wanted to find out directly from them what the market is looking like in their areas. And there's going to be a general theme here. It is busy. But before we get into all the details, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where when we hit 25,000 subscribers in the next couple months here, we're going to give away $5,000 to one lucky winner. But in order to win, you have to be subscribed. And oh, by the way, don't forget about our Homebuyer Bootcamp. If you're watching this video, you're probably interested in the real estate market. You're probably also interested in getting a mortgage at some point, I'm thinking. So we've put together a Homebuyer Bootcamp just for you that takes you through the stages, start to finish, on how to pick your realtor, how to find the right house, how to make sure that you leave no stone unturned, and so on and so forth. It will make you one of the most sophisticated home buyers in Canada. And that, combined with choosing one of the realtors that we've brought in to talk about the real estate market, will put you in an even better position. And by the way, when I talk about the 5 realtors I've selected for this video, they come as some of the most recommended people in the industry. I checked them out, I double checked them out, I triple checked them out. I called people I knew in their cities, made sure that they were the most ethical and the most honest group of realtors that we could possibly put together. We did have some other realtors that we looked at for this video that are big on YouTube as well. But when we did the background checks and we did the blind reference checks, so in other words, we called people without them knowing we were going to call people, just to ask around and see what they were like, they just didn't make the cut. So these are the 5 most vetted realtors I could find in Canada who also have YouTube channels. There are other great ones out there, but we wanted to make sure that only the best of the best made it to you. So without further ado, let's get into the video and let's talk about the Canadian real estate market. First and foremost, as we always do, I want to show you the headlines here. Buying frenzy leaves Canada with fewest homes for sale on record. This is from the Canadian Real Estate Association. Right now, the country has about 86,000 houses for sale. This is probably data that's 2 to 3 weeks old at least. We probably have far less than that for sale at the moment. I know in our market in Calgary here, it's been absolutely crazy. As Brad McCallum will tell you here shortly, there are certain areas of the market that only have 50 to 60 houses available. I know in Edmonton, in Surrey, in Ottawa, and Toronto, they're all facing the same sort of thing. That is super low inventory with still high demand. And therefore, what that means is as we head into the spring market, we are going to see rising prices again. We've also got some other things happening here, which are really interesting. The Bank of Canada has released a report as of this week. I'll go into a video on this later in the week in further detail, but what they're saying is that 1 out of every 5 home buyers right now is an investor, and I am not surprised by that at all. In fact, what we're seeing in our market is we're seeing Vancouver, Toronto, people from different areas of the country coming into the Calgary and Alberta real estate markets in order to purchase houses as investments. By the way, probably not the best idea to invest in areas that you don't know well. I've done other videos on that. I'm just going to put that out there real quickly just to say, you know, if you're an amateur investor, you aren't a professional who owns tens of or hundreds of buildings or units, then you probably shouldn't be investing where you don't know, and taking your money to another province to invest in real estate could be something that comes back to haunt you when you don't really know what's going on with the real estate dynamics and the market dynamics in those areas, because you will, when the market turns, be the absolute last to know. Now, you know, getting into the conversation here and talking about the realtors that we brought on to have a conversation about their respective real estate markets, I want to start first and foremost with Brad McCallum. Brad is probably one of the best realtors in Calgary. He's also one of the top realtors in Canada on YouTube. If you want to take a look at some really, really amazing property videos, Brad is second to none when it comes to this category. His stuff is absolutely phenomenal. His presentation skills are absolutely phenomenal. And for the realtors who are going to watch this, you know, I might suggest that in his videos, He does an exceptional job of making the properties the star rather than he himself being the star, which is, I think, why he's so successful. Now, when I asked Brad what he thought was going to happen in the Calgary real estate market, he had some really bold predictions, predicting far greater run-ups in prices than some of the Calgary economists are predicting. But I'm not going to take the words out of his mouth. I'm going to let him tell it.
Yeah, so okay, I do have a bold prediction for 2022. I actually think that single-family homes and the general market could go up as high as 15%, if not even higher here in Calgary. Now, that's mainly contrary to what a lot of other specialists are saying. I think like Royal LePage came out and said that there was going to be a 6% increase. We're going to be hearing the Calgary housing forecast coming up here in, I think, about a week's time from CREB. And my guess is they're going to say somewhere between 6 and 8%. But what I can tell you is it's more than just anecdotal evidence of what's been going on a week over week basis with sales. Things are increasing so fast that I think the predictions that they talked about for Calgary could actually happen in just 1 month, not over the entire year. I think we're going to be seeing somewhere definitely in the double digits. I feel pretty confident it's going to be around 15%. And that's purely because there's virtually no inventory out there. And our market is being primarily driven by investors and people relocating from Ontario or BC right into Calgary. So right now, for example, if you're looking for a single family home in Calgary between $500,000 and $700,000 that's been built in the last 20 years with a double attached garage, so a fairly typical suburban home that you would have found $600,000-$700,000 on the market just 3-4 months ago, well, today there might be 50 homes. That's an unbelievable figure when you think about it. And almost all of those homes have been released in the last day or two and are now going firm with no conditions. So to give you an example of this, a home yesterday was priced at $689,000. I had some agents on my team call me up, say, where do you think the market value is on this? I looked at it and I'm like, I think this home is going to probably go between $810,000 and $825,000. The home sold this morning for $832,000. Our clients bid $120,000 over ask and still lost out by $40,000. So it was just an unbelievable situation that we're finding here in Calgary. And what I think the biggest challenge is that the inventory is likely not going to be coming back by spring. And by spring, we're going to have a full-on fever, I think, in the market, with so many investors coming from out of province to invest here in Calgary. Because still, even at today's prices, even at $830,000 for that home that was marketed at $680,000, it's still a bargain relative to so many other major markets that are world-class cities.
So obviously some really interesting commentary from Brad here. Obviously, if investors from other provinces continue to roll in, the Calgary market is going to be absolutely insane. Now, moving on to the Edmonton market, we bring in Melody Wilson, who is probably one of the most innovative realtors I have met in my life. She is always trying something new, always trying to work on new ideas, create new avenues, find new ways to sell homes and get better deals for her buyers. It's amazing when I talk to Melody how much her ideas and my ideas with respect to how to market and how to build a business around the real estate community really intertwine and whatnot, which is why I absolutely love her. And I love what she's doing with her YouTube channel, multiple channels in Edmonton right now. And she talks a little bit more about whether or not the market will correct and how it might correct when it does correct. And, you know, some really interesting points here, because she's absolutely right when she talks about how markets correct and how quickly it happens. I'm going to let her go into it.
So 2022, I had anticipated that the market was going to be maybe similar, maybe stronger, but already the first not even week, it's been extremely busy. And it hadn't really slowed down. It did take a little bit of a slowdown near the end of last year, but even around Christmas time, we started to see things pick up again. So I anticipate we're going to have, if not the same market as last year, maybe a little bit busier. A lot of people ask me if they think the market will crash because last year was so high. And I have looked at stats before. Market does not do up here and then down here within 1 year. I do think it's going to stay the same, maybe slightly higher. And I think the following years will probably try to stabilize. Prior to 2020, the market was actually due to recover in 2020 prior to the world's pandemic. And so what I saw was it started to correct itself. We had this shutdown in April, And then in May, it just continued and kind of took off. So the combination of an overdue market correction plus the increased demand, because so many people are staying at home and home is no longer what they want anymore. We saw that kind of ramp up for 2020. 2021 was nuts. And 2022 is probably, I think, going to just follow that trend. People have stabilized in terms of their expectation of what life is kind of going to look like.
No, I think Melody's absolutely right when she talks about the new normal and people accepting the new normal of what their living situations look like. And as we move into a conversation around Ottawa with Peter Tulin, I asked him specifically what the market looks like there with respect to the tech industry and the tech industry's integration into the Ottawa real estate market. And he had some interesting stats with respect to the tech industry and how the tech industry and tech jobs affect the GDP of the area.
Federal government, and surprisingly, when I was doing some research, I found out that the high tech actually had a higher GDP impact to the city area than the federal government, but both are extremely strong. We also have a very large university crowd here with University of Ottawa and Carleton University. So there's the education market with Algonquin College as well that has driven some of the market. Hospitality is very big, although it's been decimated by COVID. I have a lot of friends in that industry. I used to be in the industry for a little while before real estate, but there are some drivers like that. But high tech and federal government have been the staple within the Ottawa market. It's almost replicating exactly where it was last year. Came January, just about 2 weeks ago, we're starting to see a lot of multiple offers happen again. Just as we pulled out of the holiday season, we're starting to see very limited inventory and a lot of buyer demand. So conservatively, I would say between 5 and 7% is what they're predicting for the Ottawa market for a growth pattern. But I think with inflation and the lack of inventory, we're going to probably see past that number again this year. But typically what we see is a 7-year to a 10-year holding pattern. So if history is true, we saw that 2-year spike where we're coming off of it, but we're probably going into a slow, moderate growth pattern until we hit another spike 7 to 10 years down the line. So I see that the first quarter being extremely busy, multiple offers, limited inventory. And I see probably in the latter part of the year, more inventory coming into the market that will cool it a little bit and help out the buyers.
So obviously that Ottawa market is again going to get very, very busy. And I think, when Peter talks about 7 to 10 year horizons with respect to the market cycles in that area, one thing that we know about areas that have populations with a lot of government jobs like Ottawa is they tend to remain really stable. And this isn't just for Canada, this is worldwide. The cities that have the most government employees, and by the way, in any given city, government employment is actually significantly higher than you might expect when you consider that doctors, nurses, teachers, bus drivers, and a large portion of employees almost always work for the government. Well, when you start getting into big government areas like Ottawa or capital cities of different states, different provinces, different countries, they tend to have less secular real estate markets. And I think what's happening in Ottawa right now is we're seeing this insurgence coming from the technology area. And I think that's going to have a long-standing effect on the Ottawa market. It'll be interesting to see what that looks like. Now, moving away from Ottawa and going all the way west before we hit Toronto, I want to talk about Surrey because Surrey is a really interesting market. It's a little bit on the outskirts of Vancouver, but it is very much representative of what's going on west of the Rocky Mountains. And we brought in Steve Koresh to discuss this. He goes into a little bit of a conversation about what he thinks will happen with interest rates. And I think what you'll find really interesting is his predictions as to when the peak of this real estate market will be.
Okay, so 2022. I always like to tell people, hey, my crystal ball is kind of foggy, right? Doesn't work that good, but I can tell you where we're at now. And then I can tell you where I think things will change if things change. And I think the biggest thing that could change, or the only thing that could change to really affect anything, is interest rates. So right now at January, the beginning of 2022, we are in the most hyper accelerated market I've ever seen. It's bigger than last year. It's bigger than 2016 by far. And I almost cannot believe it. However, if interest rates change in April, I think that will start to solve a lot of our problems. If they change in April and hopefully have another increase later in the summer or maybe October, I think we're going to have a nice smooth landing to this, and we'll be at new crazy high prices, which we've never been to before, but things will be okay. If they wait until October or even later to increase interest rates, I think the second half or even the last quarter, let's call it, of 2022 into 2023, there could be real problems. When I think about problems and what can happen in the market, everybody's always saying, oh, the bubble's, going to burst. The things are too high. Prices are too high. They've been saying that since the beginning of time, right? Everyone thinks that their market now is too much and they should pay less for their house, and houses are not affordable. And I've never been that person that'd be on that train. However, at this point, I'm starting to think that if the hyperinflation that we've seen over the last little bit, particularly now in the condo and townhouse market, if that continues for another 3 or 4 months, where we're seeing 4, 5, 6, 7% per month in prices increasing, at some point when they do ratchet up the interest rates, and if those interest rates ratchet up too quickly, then that portion of the lift from now on will come off. So when I did my predictions video on my channel earlier, just before Christmas, I said that I think house prices will be higher December 2022 than December 2021. However, I don't think that is going to be the peak of the market. I think the peak of the market could very well likely be halfway through this year, meaning that we could see a 20% spike and then a 15% drop, or who knows what the numbers are. But I do think we're going to see a dip back, and a substantial dip back, if it takes too long to have those federal rates increased.
So I think Steve's predictions are really interesting. I think he brings up some really valid points. And obviously, as interest rates start to increase, it could have a downward trend on the market. But what's interesting is when we get to our next guest, which is Tom Story. And by the way, Tom Story and Steve Koresh are really good buddies. That's how I got introduced to both of them, was through each other. When we get to Tom, he starts talking about what happened in 2017 when they introduced the foreign buyers tax in Ontario and rent controls, and how that increased the prices in the Ontario market really quickly. And that makes me start to wonder, when interest rates do start to go up, is it going to create a frenzy in the market where prices continue to go up, or is it going to actually cool down the market? And only time will tell, but I'm going to let Tom talk a little bit about the Ontario market. Some really great stats here.
Okay, so when we're looking at what could potentially happen in 2022, history has a funny way of repeating itself. So far, a lot of the buyers are back out, but the inventory is not there. We had a property that we took offers on last night that if I had listed 3 months ago, we would have got maybe 2 to 3 offers on it. We had 15 offers on the property last night, and it sold way above what that last comparable sale will be. When I look at where interest rates are currently at, and Nolan, you'll know better than me exactly where they could potentially go this year, but even if they go up a little bit, but not significantly, that lack of supply in Toronto is just going to be there. And when I really break down at the different asset classes and how they're going to play out in 2022, it's going to be really tough for people getting in that aren't already in the market for those first-time home buyers. I think freehold properties will remain in high demand, specifically the more affordable freehold properties. So freehold townhouses and semi-detached properties, because when you get to that detached property, you really jump up in price. And just to give perspective, the average condo price at the beginning of this year was about $745,000 in Toronto. The average townhouse was just a shade under $1 million. Semis were at about $1.3 million, and detached were all the way up at $1.75 to $1.8 million. So that's kind of the growth that we're looking at in terms of different property types. If I had to guess what I think is going to happen, I think condos are going to have the biggest percentage increase this year, just because the gap between them and all the other property types are so high. And if these 400,000 Canadians that we think are going to be coming into the country this year, and a good portion of them come to the Greater Toronto area, I think initially it will actually bump up the rental market, because I think a lot of people rent properties when they're new to a different community, but then it will come to the sale market. And it's going to affect mostly the price point sub $1 million in Toronto. And right now, most of that is condos. So it's going to be a similar story here. And sometimes I feel even like a broken record talking about this, but unless we see some real change or some real big government intervention that could really cool things down, if it's a few interest rate hikes, I think psychologically that will cool things for a little bit, but it won't change too much. We're going to have a lack of supply. It's going to be tough. And just remember, if you're a seller and you have to buy, it's relative. You're selling in a hot market, you're buying in a hot market. If I had to guess where I think prices are going to go, I think across the board, we're going to see 10 to 12% appreciation in the Toronto market. I hope it doesn't go too much higher than that, but realistically, the way that the year has started, I have not seen this much demand since early 2017. And to give some reference and context to that, in 2017, after the first 4 months of the year, in Ontario at least, we had the foreign buyer tax come in, we had rent control come in. At the beginning of the next year, we had the stress test on the mortgages. So that's when the government stepped in because things were getting a little bit out of control. I'm hopeful that doesn't happen, but there's going to be very limited supply and some big demand this year.
So obviously the theme across the board is low inventory, higher prices in the very near future here as we head into the spring market. Not a lot of inventory. When I look at the inventory numbers and I compare them to the data that I've looked at different markets throughout Canada, throughout North America, and throughout the world over the years, when we start to see low inventory numbers like this is usually what happens at the start of a run-up, not at the middle of the run-up or the end of a run-up. So when I take a look at the numbers and I take a look at the data here, it could get pretty crazy this year with respect to housing prices. It's going to be interesting to see where the ceiling is. And unfortunately, if the government goes to intervene, I don't think it's going to stop things. I think it's just going to spur on further and further and further purchasing and even more price increases. I think finding a solution to the problem, whether it be trying to take investors out of the market or trying to just slow down people's appetite for real estate, I think finding a solution is going to be very difficult outside of just simply building more houses and letting it take the 2 to 3 years it's going to take to fix it. But, a really interesting market right now. I appreciate these 5 guests for joining us and talking about their predictions for the real estate market. By the way, I highly recommend all of them. If you're looking in any of these cities, contact these realtors. These are the best of the best, at least the ones that are on YouTube. There's a ton of other really great realtors out there. I'm happy to introduce you if you don't jive necessarily with one of these guys and you want an introduction to a realtor that's not them, but these guys are absolutely phenomenal in each of the markets they serve. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. Don't forget about our race to 25,000 subscribers, and we'll see you on the very next one. Cheers.